Hi guys, welcome to TradePoint FX Weekly Outlook. In this particular video, I shall be running us through the analysis on DXY, that is the US dollar index. Reason because looking at the calendar for this week, we have a lot of fundamentals for USD. So it is very important that we understand what we are looking at on the US dollar. And after analyzing this DXY, I will analyze a couple of the USD pairs, only USD pairs, just for this video, this particular video. So here is our calendar. You can see on Tuesday we have the first chair who testifies 4 p.m. Nigerian time. Then CPI on Wednesday. We also have another USD news. That's 2:30 on Thursday. That is the PPI. We still should be expecting another one on Friday. So you can see that from Tuesday to Friday, we have fundamentals focused only on the USD. You can see how important analyzing or understanding the US dollars for this week is. So in this particular video, I will try and analyze the US dollar index with few of the US dollar pair. So let's get started. This is the monthly time frame. You can see this is DXY on M1, 1M rather. That is the monthly time frame. On this time frame, I would like to start with the last month's candle close. Looking at the last month's candle close here, this particular candle close is indecisive. Let me bring it out so you can see. This candle close here is indecisive before this current one. And let me bring out my drawing tools now. Yeah. This is indecisive, meaning for me, what this candle is telling us that we can see the US dollar to either buy or sell throughout this month. It's either buy or sell. But for me, although the US dollar is strongly bullish, you can see the bullish trend. It's clear. We can see the bullish trend. The US dollar is on a strong bullish trend. But for me, because of this indecisive movement, and the area which it's the candle closed last month, uh, I have higher buyers on selling at least to some level before it continues the bullish movement. Let me state my reasons for that. I make use of the Fibonacci retracement tool. So here, let me pick out my Fibonacci retracement. I'm looking for what is it called? A short position here. So picking the Fibonacci, the last created high, then drag it to the last created low. I already marked it out. So this particular point, this red line here, that is 108.95. 108.95. This particular area is the Fibonacci retracement of 0.168. That is my own golden level. That is my key zone for Fibonacci. Every other thing on this Fibonacci, I don't have pleasure in them. I'm uninterested in them. So this means that this indecisive candle closed at this Fibonacci retracement, which for me, I expect with this kind of rejection, I am looking forward for market to sell at least to a certain level before it continues its upward movement. We can see the market is still clearly bullish, strongly bullish. So that is that about my bias on the monthly time frame. So let's go to the weekly. So here we have weekly time frame too. There were rejections on weekly time frame. Yeah, this was about 3 weeks ago. Okay, 4 weeks ago. 1, 2, 3, 4. There was a rejection here 4 weeks ago before this big bearish movement. Then this bullish movement. This also looks like this last week one also looks like another bearish rejection. Do we see that? This last week candle also looks like a bearish rejection. It's clear. It's a bearish rejection, still on the same Fibonacci retracement skill zone. I hope you get what I'm trying to explain. So these are my reason for the bearish bias. We can also see this bullish trend. Let me take it to D1. You can also see this bullish trend. This previous bullish trend, you can see that this trend has been intersected in one way or the other, and a kind of retest on it. This is also a pattern, a trend reversal pattern. This also looks like a trend reversal pattern, and that is double top. This is the first top here. That's the first top there. Then the second top. You can see the second top here. So this is double top. This is the first top and second top. That is double top. We can see it clearly. Double top pattern here. However, we understand that this pattern is not complete, or let me say this pattern is not confirmed yet until price breaks this neckline. So this pattern is not yet valid. It is not yet valid until price breaks this neckline. Until we see a candle like this bullish candle we have here, this bullish candle here. Until you see something like that, a bearish candle, in this case, a bearish candle breaks down. So until you see something like this breaks this neckline here, that is standing as a kind of support here. Until you see a clear breakout to the downside there, then a retest back, then we can look forward to shorting, to take a sell trade on. That is that about DXY. I believe this is very clear. However, this market can still remain bullish, can continue buying from here. That is price. That is market. This market can continue buying from here. So we are not sticking to only one side. This market can continue buying from here. And let me explain my reason for the buy here. This is a support level to some extent. This is a support level. Thursday candle close a strong rejection candle, a strong bullish rejection candle, which is this inverted hammer. This inverted hammer here, this particular one here. That particular candle is a strong rejection candle on this support level, which sponsored the move on Friday, the bullish movement on Friday. Which sponsored the bullish movement on Friday. So the markets can continue, price can continue bullish here, forming a continuation chart pattern, a bullish continuation chart pattern, which is double bottom. We can say this is a double bottom pattern here. This to be our first bottom. Why this particular point will be our second bottom. I believe I'm making sense. This can be our first bottom and this can be our second bottom. I believe this is very clear on there. So with this kind of rejection here, market price can continue buying from this and continue its bullish movement. It is very possible. I believe I'm making sense. So that is that about DXY. Let's see if we have anything on the 4-hour time frame. Nothing. I believe is clear enough. So in any case, before the sell trade can be confirmed, we are looking at this particular support zone. We are looking at a breakout on this particular support zone. Once you have a breakout on this support zone, which means this support has become resistance, then you are looking for a sell opportunity. However, anything above this support is a bullish bias. A bullish bias here. Another thing is that another reason why I can take a sell trade above this support is if I have rejection on my Fibonacci. Let me. So this last created high, and I bring it to the last created low here. Okay, which takes me back to even the Fibonacci, my last zone. So very good. I will delete it. So this particular zone, if for any reason price pulls back to this particular zone and there is a clear price rejection here, I can take a short trade down to this resistance level. Something like this. If price continue moving and touch this Fibonacci point with a clear candle rejection here, I'll take my trade down to this support level. That is another idea on DXY. I hope this is very clear. So for now, my bias is bullish on DXY. A clear breakout of this support zone, maybe any of the fundamental CPI, whichever, a clear breakout of this support, then we'll be looking at taking a short on D1 is okay. So once this support level is clearly intercepted, then we'll be looking for the downfall of DXY. So after analyzing this DXY now, let me briefly analyze the other USD pairs. So I would like to start with AUD USD. What do we have on AUD USD? It's very clear too. Very clear. So I don't want to waste much of our time because I've analyzed DXY. We can see this down trend. You can see this downtrend has been intercepted. This downtrend has been intercepted, and now you have formation of some a chart, a trend rather, a trend chart reversal pattern, a trend reversal pattern now, double bottom. This is the first bottom here, while this is the second bottom. However, this pattern is not complete until we see price breaks and retest this neckline. So until we see something like this breakout, the price comes to retest it before we can say this trend has now changed from downtrend to uptrend. So with this neckline still valid, still standing as a resistance, price can continue its downward movement, giving us a continuation chart pattern for a downtrend, which is double top. We can see this to be the first top and this to be the second top. Let me mark it out. This can be the first top. This can be our first top, and this can be our second top, giving us the double top pattern. And double top pattern is a continuation pattern for downtrend. So, which means price from here can continue moving down, continue down. Which means the downtrend can continue from here. The only reason this trend, we assume that this trend has changed is when it breaks this neckline to the upside. When it breaks it, when price breaks this resistance to the upside, then this downtrend has now changed from downtrend to uptrend, as simple as it is. So that is that about that. I also have possible entries on AUD USD as well. Possible entry. My possible entries on AUD USD as well is similar to DXY. This is a Fibonacci retracement level. This level is another Fibonacci retracement level. From this point, at any point in time, if there is a rejection on this zone, I can expect that the liquidity grab on that zone can break the resistance or this. However, my first TP will still be this resistance level. If there's a rejection on H4 candle rejection on this particular zone, my first TP will be this resistance. And if for any reason this resistance breaks to the upside, then this trend has changed from downtrend to uptrend, and we can begin to ride. So the charts for USD pairs are very clear now. All what it requires now is patience. So do I have any other? Let's see Euro USD. Euro USD. Euro USD is not that very clear, so don't let me waste my energy trying to see chart that is not very clear. So very good. GBP USD to something like AUD USD. So once you see our breakouts to the upside, yeah, we continue buying. Also, I have an uptrend channel on the 4-hour time frame for GBP USD. Yeah, this trend. First touch, the second touch, the third touch, we have this fake breaker due to the weekend gap. So price is also here. So we can expect price to move from here. And expect price to continue going up from here. That is that for GBP USD too. Well, I believe my explanation of DXY should give us clarity on GBP on the other USD pairs. Let me take USD CAD for example now. So for USD CAD, looking at it, you can see it's on a strong bullish movement. However, this weekly candle is a strong bearish engulfing candle, and looking at this bullish trend too has been intercepted. This bullish trend has been intercepted here for USD CAD. The bullish trend has been intercepted. It's no longer in this bullish trend, giving us a kind of signal that the bullish trend has come to an end. So something like that. But I'm really not interested in it. Let me analyze. Okay. we can expect price to pull back to this zone, to this resistance. We can expect price to pull back up to that resistance level, up to this point, then take our sell trade. If for any reason we see price reaction, price rejection here on H4, H4 is the best time frame for confirmation on this kind of setup. For me, once I see my rejection on H4, it's best for me. H1 and M30 and M15 might not do justice to it, but a strong rejection can do on H4. It's still a short confirmation in taking a trade like this. So this is okay. Okay, I think this is okay. I think this is okay. You have our support level and you have our resistance level. Any movement in this, any price reaction in this zone, I believe we should know what to do. Then next is USD CHF, USD CHF, USD CHF. USD CHF is a kind of interesting and both interesting and disturbing pair. It's kind of disturbing in the sense that it is strongly bullish. We're expecting my trend line very well. You can see the first reaction, the second, the third, and the fourth moving up, and it's still moving up. For USD CHF, respectively the fourth line, and it's moving up nicely. However, this particular point, in this particular zone, 0.91224, that zone is my Fibonacci retracement level. Let me draw it so you can see. Okay, I believe it's clear enough now. You can see it at this point. Yeah, you can see it here. You can see my level there. That's my level. So, well then, I don't like keeping Fibonacci because of the color and co. So I'll just delete it. I already mark out my zone. So any price reaction here, you might want to consider selling, take a sell trade on USD CHF. Okay, that about USD CHF. I have analysis on USD JPY anyway too, but JPY, USD JPY is in strong bullish momentum. I think throughout the week it was on a strong bullish momentum, bearish momentum rather. Price has what's it called, intercepted this bullish trend. Price has intercepted this bullish trend, and it's not giving us a clear bearish trend at the moment. It's not giving us a clear bearish trend at the moment. Although my analysis here shows that on W1, price is currently on a strong support level. You can see it, the first, the second, resistance. Okay, resistance becomes support. It was intercepted here again. Then resistance becomes support. We shall see that this particular zone is a strong level, and D1, the previous daily candle shows a rejection here, a strong rejection. So my bet on this is that for the next few days, 1 or 2 days, USD JPY will be bullish, no matter the circumstances. I still expect a bullish movement on USD JPY for Monday and Tuesday, at least. Monday and Tuesday, or Monday alone at least. So that is that. And the reason is because of that H1, that D1 rather, because of the previous D1 rejection in this kind of zone. So that is my bias. And we can see it is forming a kind of chart reporter pattern on lower time frame. You will see it clearly on H1. You can see it. You can see it here. Double bottom. So that is that about that. Let me see if I can add one more USD pair to the analysis to conclude USD pairs. Okay, NZD USD. NZD USD. It is very clear too, very clear, just like USD, AUD USD. We have a downtrend which has been intercepted, forming a kind of double bottom. This double bottom shows that this trend has come to an end. However, this pattern is not complete, is not confirmed yet until there is a breakout on this neckline. I repeat, this pattern is not complete or confirmed yet until there is a clear breakout on this neckline you are interested in the retest where we can then join the trend. It's as simple as that. But this is daily time frame. It will take time, if not weeks, for us to see something like this. So as a day trader, how do we benefit from it? That is what I'm trying to explain now. We can take a Fibonacci retracement level here, the previous low, and the previous high. So this particular point here, let me pick it. Very good. This particular point here, that is 0.5587. This particular point here, this level, I'm interested in taking a buy trade on that Fibonacci. If in any case there's price rejection on that level on H4 4 hours. So this is for day traders. This should happen anytime within the week. Or if those fundamentals coming up, we are able to push price further and breaks this neckline, breaks it to the upside, then you can see that this bearish trend has now changed from bearish trend to a bullish trend, confirmed by this chart pattern, double top. Thank you very much. Let me see if I can do a quick recap. But it is clear, it is